Are Danes truly happy to pay their taxes? Some surveys suggest that they are. But can we trust these findings? Surveys are based on non-incentivized questions, meaning there's no direct reason for people to answer truthfully, especially when it comes to illegal or socially unacceptable behaviors, like tax evasion. Recent experimental studies suggest a very different reality. Danes do evade taxes when given the opportunity. Their tendency to evade is at least as strong as other nations, traditionally seen as less compliant, like Italy. One of these experimental studies was conducted by Guerra and Harrington and published in 2018 in the Journal of Economic Behavior and Organization. This is a lab experiment to analyze tax compliance in two countries at the opposite extremes of tax compliance, Denmark and Italy. The researchers chose lab experiments because this methodology allowed them to measure actual evasion choices and compare them between countries while controlling for all other factors, such as formal institutional conditions like tax rates, audit probabilities, and fines. The experimental design and procedure were identical in the two countries. This allowed to focus purely on individuals' actual tax compliance under the same conditions, so removing the effects of the real-world differences between Italy and Denmark in terms of taxation, institutions, and policies. Before delving into the details of this study, let me briefly explain what a lab experiment is. In a lab experiment, participants that are typically students are invited to a lab and assigned specific roles or tasks. Then they make decisions in controlled scenarios that often simulate real-life economic situations, such as markets or public goods provision. Each participant's decisions directly influence their outcomes in the form of monetary rewards, ensuring direct monetary incentives. The rewards depend on the choices made during the experiment, and these incentivize participants to behave honestly, meaning as they would in real-world economic situations. Computer clients in labs are partitioned to ensure confidentiality and avoid communication between participants. To further ensure anonymity and honest choices, decisions during the experiment and also the final payment are kept confidential and linked to anonymous ID number, not to any specific personal data. So let's now come back to the tax compliance experiment by Guerra and Harrington. This experiment follows the standard tax game in the literature. Participants earned income through a clerical task and then chose how much income to self-report to the tax authority, which was simulated by the computer. Participants were informed of the tax rate, the probability of being audited, and the redistribution of the tax revenues. Subjects were free to report any amount from 0% to 100% of their actual earnings, and were informed that only reported earnings will be taxed, and that there was a risk of being audited at the end of the study. If subjects were audited and caught underreporting actual earnings, they had to pay a fine. And this is a commonly used penalty structure in the experimental literature on tax evasion. The researchers manipulated the three key factors: the tax rate, the probability of being audited, and the extent to which the tax revenue will be redistributed. This design and also the procedures were identical in the two labs, Bologna for Italy and Copenhagen for Denmark. So the question here is, how would Danes and Italians behave in these totally identical tax scenarios? Despite Denmark's reputation for civic responsibility and also happiness towards paying taxes, Danes evaded taxes more often than Italians in nearly every condition. There was only one exception. Both were equally likely to pay taxes when two factors were present: a high likelihood of audits and high benefits from redistribution. Overall, this finding challenges the idea that one nationality is inherently more compliant than others. So, what does this tell us about Denmark's low overall tax evasion rates? Another large-scale experimental study involving over 40,000 Danish taxpayers provides some insights. Published in Econometrica, this study found that the low levels of tax evasion in Denmark aren't a result of a culturally ingrained sense of civic duty, but are rather due to structural constraints. Specifically, the widespread use of pre-filled tax returns make it practically impossible for most Danish taxpayers to cheat the system. This is clearly shown in this graph, which plots the fraction of taxpayers who evade and the fraction of income evaded against the fraction of income that is self-reported. This graph shows two main results. First, the probability of evading jumps up immediately once the taxpayer has some income that is self-reported. That are the red lines in the graph. The share of income evaded is increasing in the share of income that is self-reported, whereas the share of third-party income evaded is always very close to zero. That is the black line in the graph. This shows that the taxpayers with more self-reported income evade more, but always declare third-party income fully. To summarize, tax evasion in Denmark is very low overall, but is substantial once we zoom in on purely self-reported income. This reflects an underlying pattern where each taxpayer fully declares third-party reported income, where detection probabilities are very high, but at the same time substantially underreports self-reported income, where detection probabilities are very low. And this suggests that overall tax compliance in Denmark is high, but not because taxpayers are unwilling to cheat or happy to pay taxes, but because they are unable to cheat due to the widespread use of a third-party reporting system. What can we learn from this? If Denmark's low tax evasion is more about system design and institutions than culture, perhaps Italy isn't a hopeless case as some might think. Some reforms, such as efforts to reduce the use of cash, bring the countries closer to the Danish model. However, there's also needs to be higher probability of audits, clearer information about how our taxes are redistributed, and more tangible benefits from paying taxes. Another area for improvement is the increased use of pre-filled tax returns, which make tax evasion much more difficult, if not impossible. Finally, we can't ignore the importance of data. In Denmark, authorities can perfectly track taxpayer behavior, even overcoming privacy barriers for the sake of public good. If this level of transparency can be achieved in Denmark, why can't we try to implement similar measures in Italy and other countries with high levels of tax evasion?